Today, we're breaking down the Matthews Korea Active ETF, ticker MKOR, an actively managed ETF focused exclusively on South Korean equities. This is not a passive country index fund. MKOR is designed for investors who want targeted exposure to Korea with a fundamental, bottom-up stock selection process, rather than simple market cap weighting. If you currently own any international or emerging market ETFs, let me know in the comments how much direct country exposure you have. MKOR seeks long-term capital appreciation by investing in common and preferred stocks of companies located in South Korea. While the fund technically has all-cap flexibility, it primarily invests in large and mid-cap companies. These are businesses that the manager believes are capable of sustainable growth rather than short-term, momentum-driven returns. What differentiates MKOR is its fundamental screening process. Companies are evaluated on balance sheet strength, cash flow stability, management depth and integrity, adaptability to changing conditions, employee base, product lines, marketing strategies, and corporate governance. Traditional financial metrics like market capitalization, book value, revenues, profits, and dividend payments are also used to assess company size and financial health. This approach emphasizes business quality, not just valuation or index inclusion. If you prefer fundamentals over pure macro bets, this is an important distinction. Because MKOR is actively managed, portfolio construction and stock selection are fully at the discretion of the Matthews investment team. The fund can concentrate in its highest conviction ideas, which means returns may differ meaningfully from broad Korea index ETFs. That can work in your favor, but it also introduces active manager risk, so performance will depend on stock selection rather than the direction of the Korean market alone. From a country exposure standpoint, South Korea offers a unique mix of globally competitive companies, export-driven industries, and technology leadership alongside geopolitical and economic risks that investors should understand. MKOR gives you access to that opportunity set through a curated portfolio rather than owning the entire market indiscriminately. If you've avoided Korea in the past due to volatility or headline risk, this type of active approach may be worth looking at more closely. It's also worth noting that MKOR converted from a mutual fund into an ETF structure, launching with approximately $74 million in net assets. That conversion provides intraday liquidity, transparency, and tax efficiency benefits that many ETF investors prefer. If you've held Matthews funds before in mutual fund form, this structural change is something to be aware of. The main risks with MKOR come from country concentration and active management. Because the fund is focused entirely on South Korea, performance can be affected by local economic conditions, currency movements, regulatory changes, and geopolitical developments. Volatility can be higher than in diversified international funds, which makes position sizing important. The bottom line is that MKOR is a focused, actively managed way to access South Korean equities with an emphasis on quality and sustainable growth. It's not a replacement for a broad international ETF, but it can serve as a targeted satellite position for investors who want intentional exposure to Korea rather than passive index exposure. If this breakdown helped, make sure to subscribe to the ETF Investor and drop a comment if you'd like to see a comparison between MKOR and passive Korea ETFs like EWY or broader Asia-focused funds.